Hi, my name is Sarah Ross. I'm with Undaunted K-12. We're recording this short video to tell you about the budget reconciliation law, what it has to say about energy tax credits, and what that might mean for your school clean energy project. To stay up to date on this work, visit our website. Click on the banner at the top of the page and bookmark our updates page, which will continue to track developments around energy tax credits. As a reminder, the Inflation Reduction Act has supported the deployment of various clean energy technologies at schools, namely ground source heat pumps, solar energy systems, thermal and energy storage, electric vehicles, and EV charging equipment. For the past few years, schools have been receiving checks for installing this equipment. We're tracking some of these success stories on our website, which you can check out using the link below. The Inflation Reduction Act established several different credits to govern these different technologies. And it's important to keep those straight because the law affects these different credits by name. So Section 48 is the credit for ground source heat pumps. Section 48E governs solar and thermal and energy storage for all projects that commenced in 2025 or later. Section 45W is for electric vehicles, and Section 30C is for EV charging equipment. And also remember that the IRA provided us with phase-out timelines that were far into the future, allowing schools to really make a plan to make the most of these credits. The new law will change many of these phase-out timelines. First, the good news. The credits for ground source heat pumps remain intact and untouched. So Section 48, you still have to commence construction on projects before January 1st of 2035. There are no changes, so we still have the 5 times multiplier for prevailing wage and apprenticeship, the 10% bonus credit for using domestic content or for siting in an energy community, and a domestic content requirement for projects over 1 megawatt. It's easy to get confused about ground source heat pumps. They're also sometimes called geothermal, and there's a separate credit for geothermal energy production that does have many new rules associated with it. Similarly, there's a third tax credit for ground source heat pumps that homeowners would use and access, and that credit is also affected severely by the new law. So easy to get confused, but the tax credit that schools use for heating and cooling buildings with heat pumps, completely intact. The tax credit that we use for energy for electric vehicles will sunset and very soon. And so those vehicles need to be acquired by September 30th of this year. EV charging equipment needs to be placed into service by June 30th of next year. The phase-out timelines for thermal and energy storage projects were not affected by the new law. There are other rules that we'll talk about shortly that will affect these projects, but the phase-out timeline remains the same as it was under the IRA. For solar, the timeline is severely accelerated for phase-out. Those systems must be placed into service by December 31st, 2027. So in addition to the phase-out timelines, there are new rules called prohibited foreign entity rules. They're also referred to as foreign entity of concern or FEOC rules, all the same thing. And they specifically are going to impact our 48 capital E projects, among those that we are concerned with for schools. So 48E, our solar projects, our thermal and our energy storage projects will all have to contend with these new prohibited foreign entity rules. These rules are really concerned about 4 countries: North Korea, China, Russia, and Iran. And with these rules, Congress is seeking to limit any dollars from these clean energy tax credits that could end up in those countries. They've devised 3 tests to attempt to do this. The first is an entity level test that seeks to eliminate any credits paid directly to a foreign entity. Second is a material restrictions test, and that seeks to limit the percent of project costs that are for components that come from those countries. So think solar panels from China. And last is the payments test and recapture. That seeks to eliminate credits for any projects that are controlled by a foreign entity, meeting their definition of effective control. We're going to do a quick primer on these 3 tests. There's a lot more detail that you can read about if you see the Tax Law Center at NYU Law, their blog post on this topic. So first, the entity level test. Again, this is about who are you? And we're trying to eliminate any credits paid to foreign entities, or importantly for schools, to foreign influence entities. And one of the definitions of being a foreign influence entity is that more than 15% of your outstanding debt was originally issued to lenders from China, Russia, North Korea, or Iran. Unfortunately for schools, it's very hard for them to show what percent of their debt is held by these lenders because of the opacity inherent in the municipal debt market. So there's concern that schools just will find this impossible to owners or impossible to accomplish. The repercussions for failing this test is that you'll be ineligible for a credit. This test is going to be applied for all credits that are going to be claimed in taxable years beginning after July 4th, 2025, when the bill was signed. So again, we're worried that schools will fail this because they can't prove they're not a foreign influence entity based on how the municipal debt market works. You can see the text references here to the bill language, so you can look at that for yourself. It's important to note here that the current interpretation of this text is that it's not just debt for the project, and it's not all just debt issued within the year in which the credit's to be claimed, but rather it's all debt outstanding during the taxable year in which the credit would be claimed. There's a fair text interpretation that we might be able to consider this just the underwriters that need to, that we would evaluate in meeting this 15% test. So look again at the Tax Law Center blog for more details on that potential interpretation. Next up is the material assistance test. And recall, this is about where we're getting our system components from. The new law limits the percent of project costs that can be sourced from foreign entities, and it toggles this by technology and by year. So you'll have to know, am I doing a solar project or an energy storage project? And in what year am I commencing construction? That'll give you the threshold that you have to meet. This is going to affect all 48E projects that commence construction on or after January 1st, 2026. The repercussions of failing this test are, again, that you will be ineligible for the credit. So schools will have to work with their project developers to source materials that will allow them to meet these requirements. And again, you can see that the test references here. Next up and last is the payments test and recapture. And again, this is about preventing credits to going to projects where we think a foreign entity has control over the project. This is for all 48E projects, and we'll talk about kind of the look back that could implicate all projects, even those that started before the bill was signed. Schools are going to have to analyze any existing or new contracts that are connected to the project and make sure the counterparties are not one of these specified foreign entities. Things like licensing agreements and IP agreements, are places where this might crop up. Any payment on one of those contracts is going to be considered granting effective control over the project. And again, the repercussions here are 100% recapture of the credit or no credit to begin with. So the IRS is going to have the ability for 10 years after a system is placed into service to look at your previous year payments on any contracts associated with that project. If any of those payments is to a specified foreign entity in the previous year, they can recapture the credit. And it's this look back ability that the text gives the IRS that is causing some to be concerned that all 48E projects, again, those would be any solar, thermal, or energy storage projects that commence construction after January 1st, 2025, could be implicated. To read more about this interpretation, again, I refer you to the NYU Tax Law Center blog. They also have some great advice on how to mitigate the risks associated with this particular test. So let's try and apply these rules to a simple project at a school. It's a solar energy project where they commence construction on April 5th of 2025. They plan to place that project into service on August 31st, 2025. They will likely do a pre-filing registration sometime at the end of their fiscal year, sometime after July 1st, 2026. And they would have a filing deadline of November 15th, 2026. So the law doesn't do anything to change that normal process that schools have been going through. The school's fiscal year runs from July 1st to June 30th, as many school fiscal years do. So based on the text, this project would be eligible for a full credit because it's being placed into service before the end of 2027. Let's look at the entity level test. So this project is being placed into service within the same taxable year or fiscal year as the bill was signed. So because of that, it doesn't need to meet the new entity test. That new entity level test will come into play for projects that are placed into service during taxable years after the taxable year in which the bill was signed. So schools are in a good position here since many of them have this July 1 to June 30th fiscal year. So again, this project would not need to meet the entity level test. That's the one that has to do with municipal debt. Next up, the material restrictions test. This comes into play for all 48E projects that commence construction after January 1st, 2026. They commenced construction back on April 5th of 2025, so this project would not need to meet the material restrictions test. And lastly, the payments test. While it's possible this project will not be subject to recapture, we'd want the school to be careful of any contracts that it signs associated with the solar project or any future 48E capital projects that is going to undertake. So a future solar project, a future solar or energy storage project, because we're concerned that any of those projects in future years could trigger this look back and this recapture. So that's one concern that affects even projects that were started before the bill was signed. We hope going through this example was helpful to you. Please contact us at info@undauntedk12.org with questions or with requests for additional assistance. And thanks for watching.